Does mine work?
Hello, hello. Works again. Amazing. So as you've seen, we have another round of panels. So please come on stage. This time it's about regulatory aspects and that are more, severe. So it's about anti-money laundering rulings and legislation and people investigating whether people are money laundering or not. I think you're introducing yourself, but your pictures, amazing. Thanks for that. And the stage is yours. Enjoy. So a big round of applause for our panelists, please, and then we can go.
Yeah, first task successful. We've sat in the right order. So rather than me introducing all of the panelists, I will shortly introduce myself, and then you can introduce yourselves as well. This panel is about on-chain analysis in the context of AML. My name is Lars. I'm an external money laundering reporting officer, so AML regulation is my daily business. For those of you who haven't heard the talk this morning, AML is very important, but we will come to that in about a couple of minutes. Yeah, then maybe you can introduce yourselves, what your background is, and your areas of expertise.
Yeah, hello everybody. My name is Albert. I am the founder of AQ Forensics, and I'm a sworn court expert in the field of blockchain forensics and cybercrime. I investigated in more than 1,000 cases of crypto crime. I'm the co-author of the book Steuerzunami Bitcoin 4.0. I'm a supervisor in Africa, in Ethiopia. There I'm supporting young talents to make them fit for a job in the Web3. And I'm really proud and happy to be here today. And thank you very much for the invitation.
Hi, my name is Walter. I'm responsible for partnerships and client solution at DLT Finance, which is a German regulated investment firm and crypto custodian. And we provide infrastructure to banks, asset managers, fintechs, crypto companies, so that they can offer fully regulated crypto products in Germany, and as soon as speaker hits the table, the European Union. Essentially what we do is we provide the engine to our partners so that they can build whatever vehicle they might see fit. This could be a car, a boat, a helicopter. We just make sure that the engine runs, and part of this is also to execute the will of the regulator, so to say, and be compliant with AML policies, on-chain due diligences, and stuff like this. And yeah, with the help of those experts and tools, we can make this happen.
Semi-expert, I would say. So because I'm the head of sales of marketing of Ignaio Crypto Asset Analytics. Ignaio is a blockchain analysis tool, and we are providing the right tool set to approach all the upcoming and currently already in force regulation. And so helping customers in the public as well as in the private sector to stay compliant. But on-chain data is not only for regulation purposes, it's also for business purposes. Probably we also have some time to have a short excursus in that regard as well.
Perfect. Thanks for the introduction. Just as a short setting, because I don't know if everybody here is an expert in AML law and knows what we're talking about. Crypto asset service providers must, at least some today and everyone in the future, follow AML law, whether they want it or not, but this is not the discussion today. As you said, we have to fulfill the will of the regulator. And as part of AML law, transactions need to be monitored. Transaction monitoring is just one of the obligations of AML law. And the first question to you, Mike, would be then, what is actually on-chain analysis? What is that?
So if you are dealing with a blockchain for a moment, and I expect that many of you are doing that already, you probably heard about a blockchain explorer where you can see transactions. So an address has sent a fraction of Bitcoin to another address, so you can do your own research with a blockchain explorer. But if it comes to AML, or in a broader sense to compliance use cases and requirements, you don't have to screen just one hop. You have to do your forensics in the case of back to the source of funds, and that can be over 3, 5, or millions of hops, so to say. So, and then it's getting complicated to bring that all in the right order, to have a real visible picture in front of you. And blockchain analytics gives you the ability, with an UI, for example, to do the research in regard of tracing back to the source of funds, to understand where is, for example, this Bitcoin is coming from, and is there a risk associated to the transaction or the sending address, or in another view, to the receiving address. Then blockchain analysis will provide you with these insights. If you use a blockchain explorer, you only see the pseudonymous data. Means there is a long alphanumeric string. That's the address, for example. And you probably have a transaction hash. But you don't understand who is the beneficial owner, to what real-world entity belongs an address. And in this regard, blockchain analysis can help you and provide the right level of insight based on different heuristics and analytics models. That's what we, in a generic view, we are doing. But why we are doing this is, in regard of AML, to provide you some facts and figures. So starting 2019 until now, 2024, we are talking about 200 billions of dollars of laundered money. And this only means money laundered on-chain. So because this is a native crime we see on-chain, what we not see with blockchain analysis is the amount of money from criminal activities outside of the blockchain. That means if you are dealing with drugs and you're receiving fiat money, we don't see that amount, which probably in the next step will be brought to a Bitcoin blockchain, for example. This doesn't count into that figure. So in 2023, we're speaking about 24 billion US dollars of native on-chain crime. And this is what we are fighting against. Therefore, all the regulation around AML is enforced. So hopefully this answers a little bit what we are doing and why we are doing it.
Then the question to you, Albert, would be, as a court expert, does this on-chain analysis actually help in solving crimes or identifying money laundering?
Yes, thank you for the question. Indeed, blockchain forensics or blockchain intelligence is a very powerful tool when it comes to investigating on some cybercrime or crypto crime related cases. And I have a military background. I was almost working for 2 decades for the Austrian Armed Forces. The last 10 years I was working for the Austrian Intelligence Service. And also there in the intelligence agencies, they are using this method and combine it with some other investigation methodologies to solve some cases, to track funding operations from the ISIS, to track back to some operations, some hastes from the Lazarus group, for example. So to answer your question, is clear, yes, it's absolutely important and absolutely a powerful tool.
Yes, if I may add, for the broader context, maybe we as a regulated financial institution, we exactly use those tools, and going back to the hops, how you phrased it, and this is exactly what we need when we see a transaction that comes into the system or goes out of our system. We need to check with what wallets, with what other wallets the receiving or the sending address is associated, to screen for sanction lists, for example. It's way beyond even AML stuff. It's just for the whole transparency of the system, because other financial institutions that might want to hop into crypto, they have to be super sure that there's no malicious, quote unquote, tokens in the system. And this is where this whole group maybe comes together. So yeah, just wanted to add that.
Maybe just to clarify a little bit what we are doing. So I think it's the attendees will be interested in what we are really doing, what is the process behind blockchain analysis. So first of all, it's kind of a big data approach, to be honest, right, in a very generic way. So we are collecting a lot of data coming directly from the blockchains. We pre-analyze them, we normalize them, and what we're doing then is try to figure out what kind of addresses maybe belongs together. That is the clustering process. So clustering means all the addresses where we have proof that they are belonging together will brought together in a cluster. That means we have more transparency about the probably beneficial owner, or on the other hand, an entity. And this is the next step, to map a real world entity to this cluster. That gives you a lot of transparency instead of having that long alphanumeric string. So that doesn't say anything. So, but if you see, okay, now I know that's an exchange, like, just for an example, it's Binance, it's Coinbase, it's whoever, right? So I see the real world entity, and I see, okay, I send some coins to Coinbase, or I receive some coins from Coinbase. And since I then can label this entity with a risk flag, which means normally if I deal with, for example, Coinbase, this is a regulated KYC'd entity, and I know, okay, the risk is very low. They are a regulated instance, a regulated entity. I have all things in place which I'm obliged to in regard of regulation, that I can do the transfer. I can receive from them, I can send to them. I have the transparency that everything is non-illicit. On the other hand, we also can cluster all the illicit organizations. That means terrorist groups, darknet markets, and so on. But that also means to label all these entities, we need a lot of more data than only on-chain data. So we are also using third-party data sources. These third-party vendors probably screening all the darknet markets. They know, okay, they are acting in an illicit way. They have whatever kind of information which are coming from different darknet forums, for example. And all these data from external sources are enriching the on-chain data to get even better visibility about the players on the blockchain. And that doesn't mean that we want to de-anonymize any individual. It's just to de-anonymize the services, or probably the illicit players and services on the blockchain. So that's in a much broader view what we are doing. And just to clarify it on a different view is that we from Ignaio provide different approaches. On the one hand, which is more the forensic way, it's a microscopic view. So I probably have one transaction hash, I probably have one address, and I want to know what's associated to this transaction, what's associated to this specific address. Okay, I can do that. But if it comes to anti-money laundering or to money laundering, then sometimes the bigger picture is the better picture, right? So zooming out, having a lot of data, for example, it's not only then one address, it's probably 500 or 5 million addresses analyzed against our data platform brings a fully different picture. Even though one address is probably has a neutral risk factor, if I zoom out and analyze it in regard of the other 5 million addresses, I can probably see, oh, there are AML patterns. It's kind of a filter then, a black and white filter that I can decide, okay, my business partner, which I probably just want to onboard, is neutral in risk and I can onboard him, or probably there's a risk associated and I should ask some questions, for example.
You talked about these AML patterns, both from a microscopic or macroscopic view. What actually makes a transaction suspicious in AML terms, right? So suspicious transactions we need to report, but what is an AML pattern? Is that, I don't know, is that a certain characteristic you look for in a transaction? What, from your experience, what makes a transaction suspicious, both from a court view, from a practical view?
Yeah, when we are doing some investigations when it comes to some crypto-related fraud, we are always doing exactly what Mike mentioned. We are looking from where have the funds been sent to the suspicious wallet address and what happened after this. And a suspicious transaction from our point of view could be a nested service, an embedded service, a network related to some money mules. These are some people who are used by the criminals to launder cryptocurrencies or money for them. And that makes transactions suspicious from our point of view in the investigations.
A question to you, too, maybe. I was just thinking about these wormholes, you know, where you send the crypto and then it gets anonymized. Would you flag this as suspicious already, or is it, you know, just a service online?
It depends on the case, I think. It's not suspicious only while you are interacting with some DeFi apps or some wormholes or with some money laundering services. But if a case was opened with the officials and you report that money has been stolen and you have been interacting with some DeFi platforms or the criminals, the individuals behind the theft, then it becomes suspicious. When they are doing some money laundering behavior like multi-swapping or laundering the assets through a mixing service, then it becomes suspicious.
Thanks.
At the end, money laundering, it's all about on-chain money laundering, but also off-chain. So it's I think it's similar in both worlds, in the fiat world as well as in the crypto world. It's for the money launderer, it's all about obfuscating the transaction, right? And that's using a lot of intermediary wallets. So having that hops to hopefully obfuscate the transaction, and that the investigational authority it's getting bored and say, okay, no, it's nothing. We don't want to investigate that further because there are too much interactions or whatever. They are hoping that this will happen. And but at the end, the pattern is coming from one wallet, using a lot of intermediary wallets, and then consolidating it again in a consolidation wallet, right? So that's a normal pattern for anti-money laundering. And then they try also to use swaps and bridges to getting out of the volatile cryptocurrencies like Bitcoin to swap it into stable coins, for example. That's also a very visible pattern. And at the end, they want to liquidize it, right? They want to have fiat money. So some are kind of hodlers, so to say. But normally we see that a lot of the illicit actors trying to cash that out. And to be honest, this is one of the weaknesses of the anti-money laundering efforts we all try to put in place, because if we have that media break, if we coming from on-chain transaction to off-chain transactions, we are normally can't follow the trail of the money. So that means we normally have to interact with all the relevant players. So it doesn't make sense to establish compliance department which cares about on-chain things, and besides that, in a different island, in a different department, we have the fiat compliance team. So they have to work together, otherwise there is not a stringent AML process in place. So, but we see is that is a learning curve for many of the players here in the market.
Mike, when you say they want to cash the money out, do you mean they want to exchange it back into fiat money and transfer it maybe to a bank account, or do you think they exchange the cryptocurrencies into a stable coin and let it on the platform, on the off-ramp?
It's really both. So on the one hand, they really want to cash it out in fiat money, so because it's more liquid than any other asset. And they also have the ability with the fiat world and with the fiat money to have it in the cash channel. So, and a cash channel you can't track. So on-chain analysis means every transaction of crypto or NFTs or any smart contract interaction is seen on the blockchain because it's written against the blockchain. There is no channel beside the blockchain where you can obfuscate anything. So this is different to the normal fiat world. So there you're getting a lot of problems if it comes to the, I would call it cash channel, right? So because you can't track that, that's very difficult. So therefore they try to cash it out, to have it as normal fiat money, and then to bring it back into the normal commerce world, whatever, right?
As you mentioned fiat, maybe you remember that a few weeks ago, I believe, there were some Bitcoin ATMs confiscated by BaFin. And it's so interesting because the companies that provide these ATMs on a legit basis, it's very legit companies, they comply with the AML standards, and they really are serious about taking this heavy lift, because as soon as fiat and crypto comes in direct connection, it's just a huge nightmare from a regulatory and compliance perspective. And those I think it was 4 ATMs, or just a handful, 4 or 5. Something like this, right? And they got confiscated basically just because they probably bought these machines somewhere online and connected it to their, maybe their own Bitcoins that they have from their own wallet, from their illegal activities. And just every once in a while, when just a very normal person wants to buy a Bitcoin with cash, then they receive it. So it's very interesting, this aspect of it.
Sounds a little bit like a mixing service, an analog one.
Yeah, it's as simple as that. If you don't, BaFin is not joking, right? So if you don't follow AML law, and if you need, like, setting up a Bitcoin ATM you need a license. And if you don't do it, then I think this proves BaFin really takes it seriously. And I don't think that will change very soon. So that will probably stay like this. So from a practical perspective, because we have users of the blockchain probably in the room, what are current trends in predicate offenses for money laundering? So for money laundering, you need a predicate offense first, right? Ransomware attacks, scams, something like this. And what can we actually do to prevent ourselves from falling victim to one of those crimes?
From our perspective, there were a lot of trends out there. For example, maybe the task scams. The story is really, really simple. You have to write some comments under movies or Google entries, and therefore you will get USDT. You have to use this USDT to upgrade your level, and per each level you reach, you will get a higher amount of salary. And if you take the first payment from this unknown source, I will call it, you are in this money laundering network. So you make yourself to a money mule, a person who washed the money for some criminal actors. For example, that since December 2023, we have been working on, I think, several hundred cases when it comes to task scams. Roman scams, big butchering scams are an evergreen, I would say, when it comes to crypto crime. Do you know what a Roman scam is?
No. Can explain. Please explain.
No, okay. A big butchering scam is you meet someone online. I'm a guy and I like girls, beautiful girls. And I met a very, very nice looking woman online and she is texting me a message. Hi Albert, you have a nice LinkedIn profile, you're an interesting person. Let's start a conversation. That's the first test. Messages like these have been sent out 1,000 times to random people. And that's a step or a phase where the criminals try to check out who is responding to these messages. And if we Austrians, we are very kind people. And of course, we are really often answering and talking to unknown persons because, yeah, that's our nature. Yeah, we are really kind. And if you're answering them back, you're building a relationship. In the psychology, you know, you name it a rapport. You build a rapport, a bridge, an emotional bridge between the criminal actor and the victim. And at some point of the relationship, passive income is a topic. Yeah? And this beautiful girl knows almost everything about trading, crypto trading, making billions of euro within a couple of days. And she has a guideline for you if you're not aware with the topic of cryptocurrencies and blockchains, of course, or DeFi. And she will guide you through this process. And we are not stupid in Austria, and we say, okay, we don't give you 100,000 euros in the first transaction, so we make a test transaction. Let's say 100 euro or $100. And we are super smart traders, and we make out of this 100 euros test transaction 1,000 euros. And now we say, okay, nice system, but we have to try to cash it out. So we cash the money out. Perfect, the trust is here. And now she will get everything I have. Because I'm a super trader, I'm super kind, she's super gorgeous. I want to have a relationship with her. No, it sounds a little bit funny. It's not, it's absolutely serious. Because according to the FBI, only in the last year, I think 2.5 billion euros have been stolen to big butchering scams. And we have a lot of cases, a lot of Roman scams where older guys have been stolen. And we are talking not from thousands of euros, we are talking from millions of euros per individual. So that's a really common, not a trend, it's an evergreen scam, I would say. Yeah.
Let me add also some kind of, is it really a funny story? I don't know. So some perpetrators getting victims by themselves, because once they have that money from or out of that Roman scam, they try to obfuscate it. So they're using bridges, they're using swaps, and behind that services, there are DeFi protocols. So, and what we also saw the last year is that DeFi hacks are on the rise. The reason why DeFi is software, and software is vulnerable. So there is no 100% secure and perfect software out there in the world. So some of these DeFi protocols have programmed backdoors, so some have vulnerabilities where I can just steal the money which are there in that protocol, and therefore the perpetrators probably also getting victims because they will lose the money because the DeFi protocol was hacked. So DeFi protocol hacking is really on the rise. So that's also one of the trends we see.
About this pig buttering, there's actually a podcast episode of a famous German podcast on it, I think. Yeah, you know it? Yeah, okay. It's actually a main problem, and people don't really talk about it. So victims don't. They feel very ashamed and insecure.
So I'm a bit shocked because I recently on Telegram was indeed contacted by a young lady, and she
A Russian model?
yeah, I mean, it was we were just clicking instantly. It was great. Then yes, she told me that she's a great trader, and exactly the same story. But you're saying that I could have made $1,000 if I gave her just 100, and then but then I could have walked off. No, but it's crazy. And I mean, we're still in the online world, so this example is not just crypto. You can see this also in traditional brokers, CFD brokers and stuff like this. They have similar scams up and running. And what I see on a regular basis is just those picture perfect copies of websites where just one letter in the domain is a bit off, and then you're on a totally different site and interacting with a service that looks totally legit, maybe because you want to claim an airdrop or whatever, and then the wallet is empty. So this is also what I think is very common. Yeah, and as we were with funny stories, what I can share, I'm not allowed to share too much from our compliance department, but we see especially on weekends, unusual spikes of transactions that go into wallets that are associated with black market stuff, presumably to buy drugs or something like this. But it's also a funny thing that we see.
As I've been shown a sign already that we only have 2 minutes left, maybe one last question. So what, apart from on-chain analysis, or in addition to on-chain analysis, what actually do companies or law enforcement need for an effective crime prevention? So what do we need to do?
Ease of use of these tools, I would say. So that's what we are providing from Ignaio. So the hurdles to get into such systems are normally very high. So you need to understand a lot of things around that blockchain analysis tools. So our approach is different. So we want to give law enforcement as well as the financial industry kind of a first, as already mentioned, black, white or A/B testing, right? So to understand, I just easily put in an address and transaction hash and highly automated getting back a first result. Is there illicit activity associated to something of these transaction or not? And if, then I can give this case to a specialist, because we are all lack of specialists, right? That if you look into the law enforcement or investigational authorities, they have, I don't know, lead times of a year, I don't know. So, but that's a normal case. And a year in the crypto world in regard of obfuscating the transaction is too much. So you can't follow the money in this regard. So because it takes too much time for the authorities at the moment. So they need an easy entry, and that helps them, and the financial industry as well.
Yeah, and after you have provided the law enforcement agencies with these powerful tools, you have to give them the training and the education. And what we see or what we don't see is that the law enforcement agencies are here in some community events talking with the community about the newest trends. So they can buy some trainings from huge software providing companies, but they are not up to date. They are always behind the criminals, because the criminals are always on the edge with digitalization, with newest technologies, with newest trends, and they know exactly how to launder money.
So basically we need to be aware and need to be trained properly. Okay. I think that's it for the time.
Yeah,
I think we're open to questions.
Exactly. So if there's a question from the audience, now's the time to raise your arm. First.
So I had a little question regarding, you mentioned that in less time it is increasingly a huge problem that the protocols of decentralized finance are hacked. Did you mean that is the hacking of the end user appliances, or do you mean like the hacking of the protocols themselves? Because like that would make a huge difference in between.
As far as I know, and as far as I have the information about it, it's about the protocol themselves. So it's not about the front end or the user or the customer, it's the protocol themselves. So sometimes it is about that there is illicit activity already in programming such protocols because there's a backdoor, for example, in it. And sometimes it's vulnerable. The code is always vulnerable. It's no 100% perfect software code out in the world. And so if there is a vulnerability seen and this will be hacked, then we saw it with a lot of protocols, the money will flow to different channels, but not to the mentioned one or to the ones where it should be go.
There was a second question, I believe. Oh, yeah.
Yeah, my question is just when you're doing these investigations, what's the technology that you use behind it? Do you just query this data using BigQuery, or is there a database, or is this all done in Excel, or how do you actually go about finding these transactions efficiently?
So the beauty of Ignaio is that it is based on open source. So if you want to dig deeper into the details, you already have the chance to do so. So if you look into the project called GraphSense, you will find all the information, how we do it, because it's open source and you can see it.
If I may add, so our compliance department at the company is we consider them, and they consider themselves also as kind of detectives, doing research with various tools that are provided to them, just to exactly get a feeling for suspicious behavior or malicious behavior. So there's never one single point of truth. You just have to do the research, think with a sharp mind, and look at all these transactions, because as we learned today, those people are super smart. It's not the standard gangster. It's really sophisticated crypto stuff. So you gotta always try to be ahead of the curve, essentially.
Yeah, if that was it, I think we can close this panel. Yes. Awesome, Ben. Thanks for appearing here. Big round of applause, please, for our panelists.